Okay, welcome back, everybody. As anticipated, lunch was too good. And who had the ice cream? You see, I didn't spot it until the last minute, but I snuck an ice cream in. Really good. So just to get your attention today, we've got a bit of identity theft going on. So if you look at the thing at the back, and it's not there anymore. Where's it back? Bring it back up. We'll get there. So basically, Leo, a lot of you know Leo, has changed his identity to Stephanie. Leo's got very old, as you can tell, because he's now replicating Peter. JL's JL. And Peter, no, it's not a good look. Okay, so we are going to try and make this as interesting as possible and to help you stay with us, because this is an important topic. We always have regulatory on our agenda at these conferences because regulation is playing a significant part in the future of our industries, of our customers, and our industry itself. And it's in playing an even more important role, I think, with technology. And there's a big debate, and maybe we'll have this question later, between what's leading change at the moment. Is it technology, or is it regulation, or is it both? There was a period of time probably when it was regulation. Some people might argue it's now technology's driving change. I would suggest that there's both. And there's a lot going on. We heard this morning about the amount of regulation that's been issued over a very short period of time in Malaysia to help the digital economy. We know there's a lot of regulation happening in Europe and other parts of the world from different directions. And that's something I think we want to try and explore a little bit in this panel, is that regulation can be an enabler. Regulation can be not a disabler, but a controller in some respects. And I think we're going to kick off, because I think it's always interesting to people in this part of the world, with a summary of what's happening in Europe. Europe does, like it or not, drive a lot of what happens globally and regulation-wise. So it's great pleasure that we've got Stephanie here from us, who works with FIBIS on their policy side and on working with regulators in Europe. And so I'm very grateful for FIBIS sharing one of their key people with us. Those of you with us last year will remember we had Jan Stang, who was also doing a similar role, and that was very well received, and Stephanie's kindly agreed. Flew in this morning, looking good on it, I have to say, and will take us through a little bit about what's happening in Europe, because then we're going to have discussion on that. And other panel members, feel free to chip in once Stephanie's done her piece and make some comments, because that's the way I'd like to do it. We're then going to go on a bit of a tour. I'm going to ask Leo to give us some the CRIF, sort of overall CRIF experience in the region, some feedback on what's happening from CRIF's perspective, some of the positives and not so positives. And then I'm going to ask Peter to really dig down a little bit deeper in that. A lot of you know Peter's doing a lot of work in key areas like the Pacific Islands at the moment, and wanted him to share that, but also some of his experiences. Those of you with us yesterday at the ICCR meeting will know that Peter's not shy of lobbing a few grenades out into the audience to create some reaction, which I think you might need to do based on lunch. So feel free to do that. And then I'm really pleased that we have JL Tan from GFTN with us. GFTN is, and JL will explain a bit more about GFTN, but they're very much at the forefront of policy, working with regulators globally, policy setters around what to determine what needs to be done. And she's going to give us an overview of policy going forward. So I'm very much looking forward to that, because I think that'll be quite insightful to some of you, because that will set your business models, either in terms of opportunity or in terms of potential things you need to be aware of from a risk perspective. So that's the storyboard for this session. And let's try and think of some questions and ask a panel some questions after we've been through that journey. If you can, it would be good. So Stephanie, over to you. I think you're going to stay there and just click.
Yeah, I think So thank you very much, Neil. First of all, good afternoon, ladies and gentlemen. I'm really pleased to be there with you today. And thanks for the invite. Phoebus and BIIA have a longer history together because no matter if you're sitting in another part of the world, I think regulation is something that unites us all, right? So just to give you a bit of a history about Phoebus really quick. This is the European Association of Business Information Services. It was founded in 1973, so we're kind of an old guys band there, but has really transitioned now to represent a vast majority of business information providers all across 60 countries now, so including all the EU 27 member states, but also obviously with a larger geographic base. And I'm really insisting on the business information part because the majority of Phoebus members are business information providers, so they're not so much into the consumer part, but the lines are blurring, and I think we can have a good exchange after that on, you know, how we see these blurry lines going on together. So I have the very difficult task to do three things today with you. First of all, I have to stay awake because I had the night flight, so that's going to be the first challenge. Second challenge is to talk regulatory after lunch, as Neil was saying. And the third is to try to do an outline of the major regulatory pieces that we see in the EU without boring you to death and without and trying to be as exhaustive as possible. So I'm going to try to match these three challenges. Please, if you have questions, you can raise your hand, because a bit of interaction always helps. But just to show you, so this is the outline we've put together. So trying to see the regulatory perspective against from the EU view with three different points, and then how the business information industry is positioning behind that. So the first part is about data and data access. I think we will spoke about data all across all panels, right? Second point would be about digital and technology, and the third would be more about access to finance. And then we go into how we are seeing ourselves in the middle of all that. So if we start with data and data access, we are seeing in the EU very straightforward conflicting policies orientation. So on the one hand, you have the call for open data, which has been going through several years now to say data needs to be more open. We need to have more access to public data. It needs to be available for reuse. You need to have the possibility to bridge data, to share data between companies, between countries, and so on. So what you see here, and I try to be graphic on that, is the blue arrows are the trends toward more data sharing. So with the Open Data Directive, for example, which enables the access to public sector information and its reuse for commercial and non-commercial purposes. So this has been going through in the EU for more than a decade now, and we see the different iterations. And it also tries to describe how the framework works for data intermediaries, but also how it works for data portability. So for example, if you, as a consumer, have your data, do you own your data, yes or no? We could dispute about the ownership question. I really liked the comment this morning about do people still want to own things, or do they want to use it? That's a first question we can debate upon. And the second thing is, if you own it as a user, how can you port it to several providers if you want to switch providers? So this is what the Data Portability Directive is trying to do. In conflict, let's say, or going a little bit sideways from these blue arrows, you see the red ones, which are towards more data protection. And the first one is, of course, the very well-known, I think it's probably the EU acronym that's the most well-known all across the globe, the GDPR, General Data Protection Regulation, which puts together strong data protection requirements for natural persons data processing. It's for natural persons. What is a natural person? How is a sole trader sitting in the middle of all that, you see that, in the kind of scale, which is not really scaled, that I've put there. The second red arrow that you see here goes towards the trade secrets. So the trade secrets is another piece of EU regulation, which basically tries to protect the business secrets or the know-how or whatever can be qualified as a business secret from a company point of view from being shared wide open and copycat or you name it. So the Open Data Directive has to, on the one hand, is pushing towards more openness, data sharing and so on. The trade secret directive or regulation would go a little bit sideways because you still need to make sure that you have some competitive advantage as a business that's not going to be stolen. So that's one point. But behind that, we also see major I would call them gray zones, even though they are blue on this scale thing, but just the concepts that I'm throwing in, and I hope that we can have a very fruitful debate about that. The first one is a sole trader. So what is a sole trader? Is a sole trader a natural person / consumer, and should he or she be protected as such? Or is a sole trader a business because he is acting in a business capacity and should be considered as a business regulatory-wise? First question. Second question, owners and directors. Talking about the data, so owners and directors' data. What type of access can we have to owners and directors' data when they are acting in their business capacity, so with their mandate, but where is the balance between their business data capacity and their personal information? So where do you draw the line? Second question. And then the third question or concept, let's say, is the legitimate interest, because everything that we do is predominantly based on legitimate interest. Legitimate interest as a means to process data, but also as a means to justify why we are accessing the data. And so where does it lie in between this openness between the open data policies and the protection one that we see in the GDPR and the like? So first thing you see, even from the first slide, that we see some policies are going in one way and others are going in the other way, and us businesses have to sit in the middle and be compliant. So that's the first question. Talking about data, we also, and talking about GDPR here, I wanted to just stress what we have as data processing and purposes, because GDPR is basically saying that you can have so many different types of data processing grounds that are deemed lawful by GDPR, and so you have the list here of all the various data grounds. Obviously, consent is one of the most known. You can rely on consent from the data subject to process the data, but you can also rely on different other grounds like performance of a contract, legal obligation, the vital interest of the data subject, and the last one, the legitimate interest of the controller or a third party. So this is the one that is used by the vast majority of our people when we are processing the data. The thing is that legitimate interest is not defined per se by the GDPR. So the GDPR talks about legitimate interest as a valid ground, but they do not define precisely what is legitimate interest. And of course, what's happening in the EU when you don't have a precise definition, it can be challenged by the courts. And this is what has happened lately with the European Court of Justice, is in various sectors, not only ours, but there has been some court cases trying to define the legitimate interest. They very often go the narrow ground, so trying to say, legitimate interest shouldn't be broad and vast. But you see here on the slide, lately, there has been a very good recognition by the Netherlands lawn tennis bond. So this is a court case which basically recognized that legitimate interest can be deemed for commercial purposes, because this was challenged, believe it or not. So some data protection authorities were saying, no, you cannot rely on legitimate interest if you are processing data for commercial purposes. And here now we have an EU Court of Justice ruling that's saying exactly the opposite. Yeah, you can rely on legitimate interest for data for commercial grounds. So that's that was one of the good points that we had here. Jumping to data from use case. So of course, when we talk about data points, we mentioned that this morning that you can have a lot of data points, and the more you have, the better it is, but it has to be also useful and it has to match what you want to do with this data. I just stressed here one of the data points that has been recently going up and down, let's say, at the EU level, which is the access to ultimate beneficial owner. So this morning we spoke, I think it was the lady from in the panel just before us, who spoke about the importance of knowing a company ownership, but not only the manager, right? You need to know the ultimate beneficial owner that's behind a company in order to prevent fraud. This was very much the case in the EU when we had what we called the fourth AML, so Anti-Money Laundering Directive, which recognized the public access to UBO register for transparency purposes. This was so before 2022. Unfortunately, in 2022, there was a Court of Justice ruling, again from the EU Court of Justice, saying that this AML4 and this public access to UBO registered was illegal, or was not was contrary to the protection of the vital interest of the data subject. So what happened was that overnight, some EU countries just stopped providing public access to the UBO registers. Others didn't know what to do. Others took 2 years. I think I'm looking at you, Leo. I think Italy is still going up and down. Yeah, you're thinking about it, seriously. But that's it. And so it's a patchwork. And it's still a patchwork at present times in the various EU countries, even if between 2022 and now we've had a 6th AML directive, which now recognize that you can access ultimate beneficial owner registers based on legitimate interest proof. So, and the good thing is that you're going to see that in one of the other slides, is that there is a recognition of the legitimate interest for fight against fraud and anti-money laundering purposes for also third-party providers like us. So we are safe on that, but now we need the transposition to take place in the various member states. So you wait another, you don't know how long, because that's one of the things I also wanted to throw in. Regulatory timeline and technology timeline seems to be happening in completely different pace. Because by the time a regulation goes through, it's usually 18 months. Technology, we spoke about that. I'm looking at the members of the panel this morning. You know, technology evolution between now and 18 months, we probably have no clue what's going to be there. So how can we bridge that? You know, other provocative question. Then another spotlight just wanted to do real quick is the sole traders. So again, it was on this scale thing that we saw before. Sole traders are sometimes seen as individual, sometimes seen as natural persons, sometimes seen as enterprise, and sometimes seen as businesses. If you look at the various acronyms here, so CCD is the Consumer Credit Directive, GDPR is the General Data Protection Regulation, the Data Act talks about an enterprise which can be a natural or a legal person, and then they qualify also as businesses in other legislation. So how can we cope with different definitions for the same person acting in different capacities? We need to have a recognition of the capacity. And this is what we've been advocating also at FIBIS level, is to say, look, you can be one person, but I can be Stephanie in a private capacity. I can be Stephanie running my company. I can be Stephanie also member of a board or something. So I can have different capacities, and this should enable different possibilities to access my data. based on these capacities. So that's one of the big point that we're really working on that. And at the moment, there are some trends to lift a little bit some of the regulation on GDPR. So not to review GDPR, but to try to simplify also the EU overview to make sure that it's not overburdening the small businesses. So we may have a little chance there. Okay, that was data access. Still on? So bear with me for a second. We're talking here about digital and technology, and please don't be afraid and don't try to read. So this is coming from from Kai Zenner, who is the assistant of the member of the European Parliament, Axel Voss, who was instrumental in deciding about the EU AI Act. And this is just an overview of all the EU regulations that are somehow connected to the digital world. You can't even read the thing. I did that on purpose because nobody can cope with all that, right? Even the machine, or maybe the AI, when they are really trained, you know, they can extract everything and try to get all the bits and pieces, but nobody can cope with that. And we're asking small businesses in Europe to be fully aware, fully compliant, because otherwise they can be fined. Impossible, right? And the pendant of that is that not only do you have that many, I don't even know how many you have there, regulations, but you also have the regulators, or the bodies, or the think tanks, or the advisory, whatever capacity, you know, you have to deal with. So just for a moment, imagine that you're a small business owner, you're going into digital, and you just think, okay, I'm going to have, what do I have to do, and what do I have to cope with? Yes, impossible, right? So that's why the EU is trying to simplify a little bit the overall regulation, and that's why they are started to change a little bit the mindset and to be more based on principle, to have regulations that start to be more principle-based and more risk-based oriented. So for example, the AI Act, the European AI Act is now considering a pyramid of risk. And if you're low risk, you have less compliance requirements or transparency requirements than if you are a very high risk AI. So at least we're getting that into the overview of the EU regulation pieces. But yeah, it's going to take time to get rid of all the previous blue lines, right? Or at least to try to simplify and synchronize them. So the AI Act, well, you all know about that probably. You know, it's going to replicate in the various of jurisdictions probably. So looking at a risk-based approach, several institutions involved, and it's for AI providers, but also AI users, right? So it's important to say that it's not only for the provider itself. If you're using AI, reusing AI, then you have to look at that. The implementation timeline. So you see here, it's been adopted last year, and now we're into the implementation phase. And some of the obligations are kicking in depending on where you are or what type of provider you are. So the obligations on high-risk AI are going to be to go into effect in August 2026. For the general purpose AI and the Gen AI that we spoke about, it's already this August, so it's coming quick. And last February, already in place are the prohibition of unacceptable AI, because in the pyramid of risk, the top of it is unacceptable AI systems, which are banned, right? And these ones are already in place, so the prohibitions are already there. In the meantime, you know, all along this path, the EU is also starting to work on guidelines and codes of conduct, which is a bit of a monster, let's say, a regulatory or implementation approach to look at, because if it has to be sector agnostic, sorry, if you speak about AI, because otherwise you end up having different AIs interactions with well, the financial sector, with the health sector, you name it. And so it's, at the moment, still a lot of talks at the EU level about what type of rules can be put in place for Gen AI providers, what type of competent authorities are going to be in place, you know, so because in all the member states there is a new EU AI office, so a new body, already in the previous slide, right? But of course, it will have to have correspondence in the various countries. And we don't know yet if it's going to be, well, the financial regulator for financial services or the data protection authority or any other one. So it's the market is open at the moment for who's going to be the AI regulator in several countries. AI for business information providers and for the trade sector. The most important point for us is the question of the balance of forces, let's say, in the AI Act and the qualification of high risk, low risk. Because there has been some talks about the list of high risk AI services where credit scoring for consumers was listed as high risk AI. On the other hand, there is an interpretation from the European Data Protection Board, so the EDPB you see here, which says that logistic regression should be seen as out of the AI scope. So we have this thing which is very positive on this hand. On the other hand, how do you bridge that with, you know, the list of Annex 3 high-risk AI systems that are also staying on? Yeah. So you see here, try to put that also on a graph. You have some good points going with the EDPB interpretation, but on the other hand, where do you draw the limit and how do you qualify the high risk or not? I don't have the answer. When we have it, you know, it's going to be really good. But we want to rely on the Data Protection Board because that's a very influent also decision maker at EU level. But again, it's all coming into interpretation. Interpretation is really key, right? Another point, AI. Should we look at aligning data privacy and AI governance? You have different types of definitions of privacy worldwide. And you have also, as Derek was saying this morning, difference between how generations tackle privacy, right? We see that they're not all the same, and ownership is a different concept. Privacy, how much can you trade in order to access free content? We used to have that with advertising before. It's probably privacy is maybe the new advertising trade-off now. That's also something that's kicking in. Every company is an AI company today. This is a quote from somebody from Meta. So not sure if you agree with that or not, but I think this is, if it's not true today, it's going to become true very soon, right? So how do we bridge that with protecting the privacy and the data privacy? So jumping, and please don't hesitate. If you have questions, again, you know, I'm happy to take that. But jumping now to another part, which is digital cybersecurity and DORA. So I know you had some panel discussions, some talks about cybersecurity, so I'm not going to enter into that. Just to talk a little bit about DORA. I don't know how many of you our parents are familiar with a cartoon who's called Dora the Explorer, right? So it's the little girl with, you know, short hair, and she has a magic backpack because the backpack is this side, but she has the whole world in the backpack. Well, guess what? DORA, the Digital Operational Resilience Act from the EU, is a little bit of the DORA backpack, right? You have everything and anything in there, and the good news is that you can possibly dispute if this is going to be applicable to you, but the bad news is that yes, it will, because no matter if you are a financial institution or not, if you are a critical third-party provider to a financial institution, a financial service, it's very likely that you're going to have to look at the DORA regulation. So just very quick on that, it is what we call, sorry for the legal jargon, a lex specialis. So it means that it's sector specific for the financial sector. And the idea here is to try to put some rules about the operational resilience and what different providers have to do and have to comply with in order to make sure that they have contingency plans in place, that they report about breaches, that they are, you know, all these kind of things. DORA, super technical thing. The important thing for us as business information providers or as credit providers and scoring providers is much more on the ICT third-party risk management, so assessing if you qualify as a critical third-party provider or not. And if you do, it's very likely that your clients or that any institution, financial actor that you are in touch with in the EU is going to require you to look at what DORA says. I'm not going to go through all that because it's super technical and it really needs to have a deep dive on that. But just you have it on the red arrow, the most probable important regulatory technical standards that you have to look at for DORA. So timeline again, it's already active. You see we're now from the 2025 point. So it's already applicable, and now starts the designation of who is a critical third-party provider and who is not. And if you are interested, a bit of of announcement here, but FIBIS is having a webinar next week with ICISA, which is the International Credit Insurance and Surety Association, on DORA. So unfortunately, the time is probably not the best for for Asian colleagues. So I'm sorry about that, but you can register and get access to the recording if you want. So still on? Okay. Moving to access to finance. So access to finance here. Just talking about AML, and I really like this morning because a lot of you talked about AI and ML, so AI and machine learning. Here I'm bridging the two, talking about AML, but AML is a different acronym. It's anti-money laundering, right, in the EU jargon. So again, we went through all these bits and pieces with the anti-money laundering regulation, with the change that took place after the Court of Justice invalidated the fifth AML directive. And now we have a new body in place and a new set of regulation, which is composed of different instruments and already applicable for some part, and the full transposition for the beneficial ownership part is going to be by the 10th of July 2028. So again, you know, we're talking 3 years from now. So what's going to happen in the technology 3 years from now, we have no clue. But the good news here is that we have written black and white a recognition of the legitimate interest to access UBO for providers of AML, CFT, provided that you're using that for fraud prevention or to fight AML. So that's a good achievement. Another piece of regulation that's in the pipeline at the moment at EU level regarding access to finance is what we call FIDA, so Financial Data Access Regulation. So FIDA is a little bit the Open Finance 2.0 of the EU, if you want. So they went from open banking. Open banking went on quite well. The UK implemented it very, very well, and then the other member states are thinking about it, right? And now, but of course, everybody realized that open banking was not enough, and now we want to talk about open finance, right? And but in order to access all the information that could be potentially shared or streamlined with the open finance, we need to have a financial data access overview or regulation. And so this is what FIDA is doing. It's putting in place some rules about access to financial information. with several definitions. So who is a data holder, who is a data user, who is a data intermediary, a financial intermediary service provider. And of course, again, we are sitting in the middle of all of that because we tend to view ourselves more as data users than data holders, but are we qualified somehow as financial information service providers? It's still unclear. And FIDA hasn't been finalized yet. It's still discussed at EU level. So yeah, some bits and pieces are going to be changing. The point that it wants to put in place from an operational point of view is to have harmonized financial data access schemes, meaning that you wouldn't need to have so many different layers or dashboards as we saw this morning, but that there could be more harmonized possibility for the user to access that. And of course, important to underline, this would be based on the user consent, right? You're not going to share the information, the financial information, sensitive information from a user without his consent. And so that's a key element of FIDA. Again, the issue of the sole traders, where do they sit in the FIDA regulation? Question mark. So, with all that, what is Phoebis doing? Well, we are, as I said, we tend to define ourselves as business information providers, but the lines, are kind of blurring. So what's the difference, for example, between credit scores and credit rating? The EU has a pretty defined credit rating regulation in place for now 10 years, I think, 10 or 12 years. But the beauty of all that is that although there is a very clear differentiation between a credit rating provider and a credit score provider, with the new ESG regulation now, an ESG rating provider can be an ESG score provider. Because the ESG rating definition in the ESG regulation encompasses both the ratings and the score. So again, from a tactical and operational point of view, how do you bridge with all these different definitions? Impossible. The other thing we also tend to insist upon is that, we are business information providers, and it's different than consumer credit bureau. But again, as we said, the lines are blurring, and where do our sole traders sit in the middle of all that? So quite a question. And last but not least, there has been some attempts very lately, and when I'm saying lately, it was last month in the EU, in the UK, sorry, and there were also some different consultations in different EU countries, such as France, for example, to try and come up with a super large definition of a data broker, which could potentially encompass us into the scope. And so you see now we are seeing that we are in the middle of various definitions by the regulators, which sometimes are not matching completely with what we do, but also sometimes need to have some better explanation. So what we feel, and we feel that also in cooperation with other sister organizations that we work with, such as BIIA, such as Axis, and so on, is that we need to be clear about what we do, how we interact with the data. First of all, how we access the data, how we interact with the data, why we are interacting with the data, for whom, right? Because it's and what is the legitimate interest of us being processing the data, for which purposes and for which third party. And so the focus on businesses, including MSMEs, is really important. Also the fact that the use case, for what are we processing data, so making sure that we define that very clearly, because otherwise you could fall into those gray zones. And also the promotion of the fight against fraud and the financial inclusion, because no matter what, we come to this last line, you know, we want to promote the financial inclusion, we want to secure the global trade, and we want to make sure that we have advanced trade credit and that businesses can trade with their counterparts all over the world. And that's the end of my presentation. Thank you very much.
Thank you, Stephanie. And I make no apologies for the length of that presentation, because I think it's important to actually have all that detail and be aware of what's coming up. And there's some key things in there which I think, I mean, obviously this AI and credit scoring thing is being debated, which is obviously causing a lot of the information providers a lot of consternation as well. But and obviously this definition thing around what is an individual, what is a business, I know is causing a lot of grief in Europe in a couple of countries. So, but it is very common, as probably if you don't know, that obviously with European regulation, it comes at a very high level. And so you go through a large period of time afterwards, which keeps everybody in the legal profession well employed, and the lobbying profession, may I ask? I know you're in that, Stephanie, but in terms of trying to work out what does it exactly mean. If you're sitting there now, you probably think in your own country, you're probably lightly regulated after all that, and you probably are. But what you need to be aware of, and why we do this, is that you need to be aware of what's going to come along. You all, probably, your customers all trade with Europe in some context or another, so you need to understand that if the businesses that they're trading with in Europe come under this, it's going to affect you. So that's simply a way to do it. And DORA, I think, is a very interesting, and I do like, my daughter's 28, but I still remember DORA. In fact, I've got Dora the Explorer, a little ball, actually, at home. But I think that is one that's really very, very important at the moment, because that's the EU saying this is how they protect their infrastructure. So, and I think we'll see that doing that. But panel, any immediate comments? Leo?
Yes, absolutely. First of all, congratulations for the presentation. It's extremely informative. And for what it was possible, it was able to simplify a little bit the complexity of these 2 decades of transformative regulatory activity. And now, first of all, my question to you and to the audience, are the European crazy? I mean, why should they not protect privacy and then pursue open banking? And maybe second of all, secondly, a comment. Now, we're talking about legislative changes. Now, the European regulations or directive are very complex initiatives from a federation that then typically trickle down into primary law. Now, they set ethical principles. And if you remember the first slide, we have an arrow going up and an arrow coming down. Ultimately, the regulator, and I'll try and translate in an anecdotal sort of way what has happened from the regulatory system. Internet bubble or internet revolution, late 90s, early 2000s, data is everywhere. Then Steve Jobs comes with a smartphone, and Mark Zuckerberg comes with a platform, and you're being targeted in a very subliminal way in your place of residence, in your moment of weaknesses, et cetera, et cetera. And all this data is being accumulated on you, creating excessive amount of temptations for a large corporate to take on abusive commercial practices. And most of the regulators throughout the world started pulling the brake, including the European Union, which started discussing about privacy in the very, very early 2000s. Actually, the first regulation that was issued in 1995, data privacy protection law, then revised again in 2015 or 16, if I remember correctly, with the GDPR. Then the financial crisis happened. 2007, 2008, which was followed by a 5-year major credit crunch. And every bank around the world was somewhat bailed out by governmental intervention. Trillions and trillions of dollars that went into recapitalizing banks, which had burned enormous amounts of assets. Now, after recapitalizing the banks, government said, well, can you start lending again, please? Because we kind of need you to deploy capital in the economy if we need to reaccelerate GDP growth. I cannot, it's a bit difficult, it's a bit risky, I'm still trying to get rid of that toxic stuff that I have in my balance sheet. I need more data, I need more data, I need more data. And hence, we go from privacy to open banking, and now even to open finance. So that somewhat explains the paradox of arrows going in opposite direction, that I think explains the not logical, but ethical link between protecting the privacy of individuals, but also further opening up the privacy of individual to support large enterprise, as long as large enterprise agrees to pursue more a societal, no, public good. So this presentation, really very, very well done to try and simplify that complexity, represents the effort of the European Union to try and create a more just economy, a more fair economy. Not only to include more people in the banking system or in the service industry, but include them while making sure that we actually collectively do their long-term good, contribute to building their long-term. And I don't like the word financial inclusion, because I could be happy being excluded from lending. I'd be better off paying cash my house, rather than financing it with a mortgage. But the idea of a more democratized financial well-being. Yeah, so I think that's a very important concept that ends up not being as fairly represented in this presentation, but that should be the major tagline. Now, in Europe, it has been more complex. In Southeast Asia, I've been here, maybe taking a cue from the question about, my last 15 years in Southeast Asia. You have a somewhat embryo of a federation in ASEAN, but most of the legislative activities are still the prerogative of the individual states. And unfortunately, and I say that deliberately, we're tackling the issue with the regulators, not the legislators. So we have regulation number 1 from the Ministry of Telecommunication Information, regulation number 2 from the central bank, regulation number 3 from the FSA, regulation number 4 from the Trade Ministry, without first having done a sort of realignment of what should be the ethical guiding principles as to what is the type of society that government needs to support in shaping, and then assigning to the sector-specific regulatory institutions the difficult job of finding the standard operating procedures or the regulations, the operational implementation of the law has to how actually balance between privacy, corporate interest, and well-being of consumers. I've worked in Indonesia, in the Philippines, in Malaysia, in Singapore. I've been here for 15 years, and I've participated to many sort of focus discussion group or regulatory reform tables. But it was always at with the ministry, or the legislator was very, very seldomly involved. And the problem ended up being that we don't know what to do as operator. If I move to the right, I break one regulation. If I move to the left, I break another regulation. And in this context, as service providers to the banks, we don't sell. Or we don't sell as much as we can because our final user doesn't have the actual understanding of how to leverage their solution in a consistent and compliant way to actually pursue their business objective. Indonesia, it's a country that it's very much close to my heart. I spend there a lot of my time, and it is a perfect example of this. It is a very, very vibrant, there's a lot of regulations being issued every day, but it's quite impossible to pursue them. For CRIF, this has been a pretty substantial challenge, especially because we've been trying somewhat to make sense of the regional offering that we have. And in terms of data assets, we have really knocked it out of the ballpark in the sense that we have been able to establish data assets in about 12 countries. No, it's not about professional service, analytics, software, micro-analytics, scoring services. The company, over the course of the last 12, 13 years, has built 3 consumer bureaus and about 10 commercial bureaus. And obviously, the potential of merging these type of data to a certain extent would have a gigantic trickle-up effect for the economy and for the institutions that might leverage these things. Plus, maybe one final comment before I also take too much time and leave space for a more interactive debate. I think in one way or another, everybody, from the first keynote speech to all of the panels, we have basically bumped our head against the issue of regulation / legislation, if you agree. There's a couple of comments that were made. I'm just gonna pick up one. I would like to acknowledge the great insights shared today by many of the speakers. But there was the second keynote speech, Professor, and I forget the name, I apologize, but he said, data is the new gold or is the new currency, but can you forge no currency and not expect to be executed? So it is really something that we are still not prepared to handle as an industry, as an association. We're small, we're not on the radar of the legislator, but we definitely need to organize ourselves to bring our expertise on the table to support a legislative reform. Yeah, thank you.
Thank you, Leah. I know, I mean, there's some very, I mean, there's a question I suppose we need to maybe just think about as we go down the panel, but I mean, from my perspective, sometimes regulation is the easy way, isn't it, to get policy implemented. And I think, you know, it'd be good to see, and there are examples, I think, in Asia Pacific of, you know, where there's been a dialogue. We talked about this yesterday in the ICCR meeting, where a lot of regulators were there, and are still here today with us, but it's all about, you know, how can you have a collaborative effect, and how can you achieve more from that? And Peter, I'm going to sort of maybe throw that one at you, because you've been at the forefront of, you know, putting bureaus in place for many years, and you know, you've had examples of both, and you know, pros and cons to both. But maybe you want to just add a bit of background.
Yeah, thanks, Neil. Well, I feel a little bit like the poor cousin if I wear my Pacific hat, putting aside New Zealand and Australia. Because, you know, don't strain your eyes. There's all that regulation around data protection. Absolutely zero. We do have data protection legislation in place or on its way in Papua New Guinea and Vanuatu. But we operate bureaus virtually in most of the Pacific countries. But, you know, just looking at the impact of all the lawyers in Europe, one of the things, and you know, these are the sorts of challenges that you have in very small jurisdictions. And when we're talking about small jurisdictions that have credit bureaus in the Pacific, you know, if you look at the Cook Islands, they've got 17,000 people there when they're all at home, and it runs a credit bureau. Very small, but you know, we have capacity constraints in the Pacific. We talk about, you know, regulation around the digital economy. We would love to have a digital economy in the small Pacific countries. You know, we would like open banking. In fact, you know, the Pacific is one of the most underbanked parts of the world. And as an example, the Australian government recently gave to ANZ Bank $85 million just to encourage them to stay in the Pacific. You know, law drafting, it's a big challenge in the Pacific because we don't have, you know, a lot of lawyers. I was thinking maybe, you know, the EU could export a couple of lawyers, you know, to the Pacific, and, you know, we could probably do a pretty good, you know, we could let them in tariff-free. But on reflection, maybe not. Yeah. But, you know, we do things a little bit different in the Pacific because we have to. We adopt a very collaborative model. And as an example, you know, the credit bureaus were established quite a number of years ago. And on reflection, I think, you know, we've probably had the longest running sandbox. You know, we were I didn't realise what it was. But when we looked to establish the bureaus in the Pacific, we had to find a way that would work. So we drafted a code of conduct as an industry, went to the regulators and said, how about we do this? And they said, yeah, we think that's a good idea. If you follow the code of conduct, we're happy with it, and here's a no objection letter. And that's the model that has been running for many, many years. You know, the Bureau in the Solomon Islands is managed and serviced from Papua New Guinea. The Bureau in Vanuatu is managed and run from Fiji. It's quite unique, and they work pretty well. We're now developing a regulatory environment as a consequence of some legislation that was passed in Fiji. There were some massive unintended consequences of that legislation that closed the Credit Bureau down. That's every country's sovereign right to do what they will. But I think one of the things that has been highlighted about the EU, and that will flow right throughout everywhere, is the unintended consequences. And I think one of the other points I'd like to make, and this is just based on my experience globally, and it's not aimed at anyone in particular, but you know, regulation is regulation. It's only a whole lot of words on paper. Unless there is capacity and willingness within regulators to enforce it, it's just a roadblock and a big irritant. And people will arbitrage and do what they want.
Yeah, thank you, Peter. I mean, I think there is sometimes a somewhat naive belief you put regulation in place, that's the job done. And, you know, it needs a huge supervisory element to it. And, of course, that involves an awful lot of people. And that's not necessarily a resource that's available. But that's very useful. Joe, you just recently, as GFTN, been running something in Europe as a 0.0 forum, which I'm sure brought a lot of European regulators to that. And I'm sure probably, well, I'd love to have been there, but I couldn't, unfortunately. But, you know, I'm sure there's been a dialogue there about where does Europe sit in all of this. And, you know, and as Stephanie's mentioned, Europe's trying to pull back. They've got, I think it's not a one in, one out, but it's seeming like that, isn't it? So regulation. But I'm intrigued to understand how Europe's being perceived in the global stage, and maybe you can then move on from that into what you think, how that's working into policy.
Thanks, Neil, and thanks for the great presentation as well. I actually wanted to take the stance a moment here to defend the regulators a little bit. I know there's been some chatter about how regulation has been done. Maybe also as a former regulator, so a little bit of background about myself and GFTN as well. So I was formerly at the Singapore Central Bank, an integrated regulator, the MES, the Monetary Authority of Singapore. GFTN itself as well is also, originally spun out from the MES, and on our board sits the former MD of MES, the former Chief FinTech Officer of the MES is our group CEO as well, and we do have the Deputy Managing Director of MES on our board also. So as you can tell, the DNA of GFTN is quite policy-oriented, so we speak to a lot of regulators on a regular basis, and we try and create that safe space which we then bring the industry. So it's kind of the other way around. So that's why I'm going to defend the regulators a little bit, as Neil rightly pointed out, at 0.0 Forum, which is our annual policy technology dialogue that happens in Europe every May or June. We did speak to some of the EU regulators as well, and one of them, so this gentleman named Peter Kirstens, he's basically known as the godfather of MiCA, so the Markets and Crypto Assets advisor as well. He actually lamented as well and said, yes, we, as the EU, we have first mover advantage, but of course we also have first mover disadvantage, right? We had the first to put out the regulation out there and the act out there as well, but what that means is we always have to kind of make tweaks later on. So on one part is harmonization, making tweaks to different adjustments in technology and also industry adoption that comes along. So they also have the difficult job of having complaints, listening to complaints and having to edit and amend their act as well. And on the other hand, it also tempers a little bit of development for their side because their innovation, they may hamper some sort of innovation and attractiveness or competitiveness to other markets as well. So it's difficult being a regulator on that side of hands. They have to think about all of the things also. But I would say there are some ways to look at it around it as well. I think one thing that came up specifically in some of the dialogues that I heard this morning as well, it's the importance of localizing some of these frameworks. So making sure that we account for local tech stack realities when things like DORA, things like the EU AI Act as well is then implemented across different regions, and that's the part where we try to also convene and collaborate with partners like yourself, BIIA, to have these regulatory dialogue, bringing the regulators to the table and telling them this is the problem that's being faced, and making sure that there's that open dialogue between the industry and the public sector as well. And that's where a lot of GFTN plays in that space as well. We bring that dialogue and create those corridors for discussion. On the other hand, of course, your first question when you opened the panel is also, does technology move faster than regulation, or does? Of course, the answer is technology does move faster than regulation as well. And we've often seen that, of course, regulatory capacity will lag behind, but especially in emerging markets as well. So I think for regulators, they need to constantly interpret fast evolving technologies, which is not easy as well. You have to be in tune with what's happening on the ground, making sure that as you roll out regulation as well, it's on pace with different changes. So that's why I think we usually advocate for the creation of policy test beds, so industry pilots. The BIS does this very well with a couple of pilots ongoing in Project Nexus, so cross-border payments, creating that multilateral network that interlinks some of the instant payment systems as well. BIS also does Project Agora, which is sort of how tokenization can enhance wholesale cross-border payments. So when you get sort of traction with the industry and you test that bit by bit, then you can roll it out in entirety. That's also one way to do it, how to get over that problem where technology is running faster than regulation. That's where I would add my points.
No, I think that's very useful, and I read that as a more collaborative approach, I think, which is good to see, and I think that's the only way they're going to be able to keep up, I think, and as we've already seen with AI regulation, it took too long, and it's already being challenged, so, I think that's a very useful thing. Any responses from Stephanie on that?
I think you nailed it, Jill. It's not about opposing regulators and industry. It's really working together, and the ultimate goal is to serve the consumer and to empower the consumer. I like this word, because the user or the consumer, they are the final ones who are, getting the products or the services or not getting them, and they are the ones who are the final judges. So definitely it should be seen as a collaborative approach. Just to go back also to what you were saying, Neil, one of the key points is also, and you were saying that too, Leo, it's about enforcement. Because you can have the best rule in the world if you don't have enforcement following on regularly, and also enforcement with iterations, right? Going through, following the technology or following the change in user behavior, in society expectations and so on, then we're not going to get it. So really working more on enforcement, but not in silo, possibly, with a global view. And that's the helicopter view is a very difficult one to get. So definitely working in collaborative approach is the way forward.
Yeah, certainly from my perspective, I think, every country or every jurisdiction is extremely different. Different cultures, different ways of doing business, and also different capacities and what they have. And I think that needs to be understood, because that is a major issue for us. And driving or underpinning that is, there's got to be public awareness and education. We can have all this sort of stuff, but if the public at large don't really understand what's going on, and in a lot of jurisdictions that are very modest, infrastructure, regular electricity, internet connectivity that doesn't fade when it starts to rain. In the developed world, we take so much for granted. And, we need to understand that lots of jurisdictions aren't that blessed. And it's not that the people don't deserve it. They are no different than you and I. They have needs just the same as you and I. but they're spread across geographies that are real challenging.
Okay. Yeah.
Maybe another comment. I know that there's a lot of regulators in the room. There's definitely a lot of practitioners. Unfortunately, there's not a lot of banks because it would be interesting to involve financial institutions directly into this conversation. We represent a supporting infrastructure to the large service industry, whether it's financial or non-financial services. So we do the what and the how. They basically determine the why. And I would also like to underline again the difference between legislation and regulation. Let's say in the European example, the legislation is we need to limit, privacy breaches to a certain extent, but we also need to open up data so that we can give the right product at the right time for the long-term benefit of the consumer. Now, as most of us are operators coming both from the business information world and the credit bureau world, I think it's important to understand how complex that is to actually deliver. CRIF is a European bureau. It's been there for 40, 50 years and it has it's omnipresent more or less in the European continent. It's been at the forefront of the open banking implementation, and it's a trench war. And the upside is relatively limited in the sense that at a regulatory level, they've implemented so many rules that extremely curtail the type of business opportunities that can be pursued. So you're a real-time aggregator, you're moving data just through your system, you're scoring in transit, and picking up on some of your comments. In transit, you should also be able to distinguish from my open banking and my open finance data if my subscription to Netflix is for business or it's for my family. As a sole entrepreneur, I should be able, as a bureau operator or open data aggregator, to take your transactional data from your deposit account statement and distinguish which transaction you have executed for the pursuit of your business and which transactions you've executed to actually pay the electricity at home. Because the data that you are generating as a consumer should be completely irrelevant, covered by privacy, not secrecy. So it becomes extremely complex. Plus, it doesn't allow any type of data accumulation. So it doesn't allow operators to really build those type of scalable models that come when you have an asset and you can resell it endless amounts of time. And so keeping distinct the discussion between legislation and then implementing rules and regulation once the sort of moral question has been answered is very important. Yes, and then having the final users always actively involved in the discussion, because again, we are supporting infrastructure, we're supporting industry to our user base, which is utilities, e-commerce, BNPL, bank. It's a huge, and trade. More and more, we're talking about digital economy. We're not talking about lending or sector A. We're talking about the economy that relies on data. Now, historically, I think we are the only breed, the only type of institution that focuses on being a third-party aggregator of data to fulfill a purpose that lies within another industry. And that's why with the World Bank, IFC, there's been a lot of code of conduct, like the ownership structure, trustability, neutrality, XYZ, data storage, data security, because it's kind of like the Central Reserve. You trust the Federal Reserve to hold of your deposits in gold or currency because they're trustable and they will only use it to re-put liquidity back in the market. Same as credit bureau. In our limited field of action for consumer lending, every financial institution was storing with us consumer lending data because at the end they wanted to combat fraud, they wanted to minimize risk, and they wanted to boost operational efficiencies. We're a three-legged table. That's it.
Okay. I think there's a key element of trust, isn't there, in all of this? And I think as the industry needs to work, and you mentioned it in your presentation, Stephanie, I think it's about getting the regulators to understand what we do. It's about the trust, I think, and I think there's the opportunity in Asia Pacific, and there's examples of that, I think, where that trust has been established very early on, and so you haven't got into that situation. I think probably it was almost a bit too late in Europe, wasn't it, in a way? And I think in this and the takeaway, I think, for anybody in this region, and one I've always advocated, is you need to be working with your regulators, talking to them, working things through on a regular basis. It's building that trust and not waiting for what I always call the car crash moment, to then try and pick it up and sort it out. And I'm afraid there have been examples where probably the industry hasn't been involved in building that trust early enough on. And Peter will, not now Peter, but I'm sure later could give you plenty of examples of that. I'm mindful of the time, and I'm really very pleased that you all stay with me. I haven't seen many people leaving, so well done, panel.
There's one.
There's one there.
There's one.
Okay. But I think it's been very useful. But I wanted to sort of, as I mentioned at the beginning, wrap up with a little bit about looking to the future, which is why I'm very pleased that JL's going to be able to hopefully a few slides just to give you some thoughts about what's coming up, because maybe, dare I say, if you think you've got enough on your plate now, this is maybe where it's coming, and hopefully some of this is positive as well in terms of opportunity for our industry to play a role. But no more, JL, over to you, if I may.
Thank you. And if you can bring up the slide while I speak on this, great. So we've put together a couple of slides, and I wanted to kind of frame what it looks like from our perspective, because as you can see, I'm from GFTN, which stands for Global Finance and Technology Network. So we're very much centered around, building a resilient, inclusive, and secure financial future, and the way capturing the opportunity as the fintech market fintech transforms all the markets around the globe as well. So to kind of mention why we are covering fintech in particular and focus on that. We know that fintech is no longer on the periphery. By 2030, global fintech revenues are projected to quadruple to 1.8 million. And you can see that APAC is overtaking the US as the largest market as well. Latin America and Africa also are expected to grow fastest at over 25% annually. And to us, the message is really clear. The future of fintech is being shaped in the emerging markets. So this growth trajectory actually reinforces why, for us at GFTN, we operate at the intersection of policy, finance, and technology. And we see that emerging markets often leapfrog legacy systems as well, but this requires a lot of intentional scaffolding, which combines agile regulation, inclusive financing models, and as well as scalable digital infrastructure. All of this was echoed also in some of the conversations or keynotes that happened this morning as well. So to us, the fintech success in these regions really depends not just on innovation, but on a couple of words that Neil used as well. 3 things: trust, interoperability, and policy alignment. So for us, we're trying to make sense of this and connect the dots along these 3 domains so that we can ensure that digital transformation happens, but also happens inclusively, securely, and sustainably as well. So our unique value proposition here in the next few slides, we'll talk about how we convene public and private sector leaders to co-create these policy frameworks, how we can pilot some of these financial innovations and then expand access to digital infrastructure and capital. Because we believe the fintech revolution is built with resilience at its core. So because of the fragility of many of the financial systems in the global south, as echoed by some of the panelists earlier today, there is a lot of disproportionate exposure to shocks like COVID-19, inflation, or climate risks as well. So this means that the wave of innovation must not just reduce friction, but must also reinforce stability, strengthen local capacity, and also promote long-term economic participation. So we see... Sorry, just to go back on this one as well. So we see a lot of emerging tech stack potential, as you can see quite a bit on the 3 areas that we've seen there as well. Quantum computing. I only heard one panelist talk about quantum computing today, other than Peter. Could also add 600 billion value in financial services by 2035. So that's really where crystal ball gazing, that's really something that's coming up as important. Gen AI, of course, as you've heard multiple times, it's projected to contribute 200 to 340 billion specifically to banking as well. So that's a huge application on the financial sector. And tokenization also could exceed 4 trillion in market cap by 2030. But of course, to capture all this value in the tech stack as well, we need enabling policy and regulatory frameworks, which is the key point of this panel too. With technology, of course, there's risk, there's fragmentation, and also misuse if it's left unregulated or inaccessible. So as just to frame this as well, what we mentioned is working closely with governments and private sector is important to help develop those global policy frameworks and then support the local regulatory capacity that we were talking about. And then we can also de-risk adoption through these shared platforms. So I want to talk a little bit about where we see the geographical focus in the next few years. For us, I think the focus on the global south for us is quite deliberate. These are the markets where financial inclusion gaps are widest and where the responsible deployment of technologies can also have the most transformative impact. So from open finance tools that bring unbanked into the formal economy, to AI underwriting, to unlock capital for informal SMEs, we see emerging tech as a powerful lever for us, for equity when coupled especially with smart policy. So for us, rather, in addition to regulatory frameworks, it's also about market access and capacity building, and then I can address a little bit more of that in the next slide. So apologies for the wordy slide. I know it's quite small on screen, but these are sort of the major policy areas that we are looking at across the core tech stack as well as the financial services side as well over the next 5 to 10 years. So I briefly mentioned quantum resilience as a key one as well, the need to accelerate that move to quantum safe encryption across critical financial infrastructure. As regulators, they're always looking at risk first, right? So even if it's not happening now, that's the key bit that will happen soon, and we need to kind of have something in place before that. So that's why the more progressive regulators are already starting to look at quantum safe encryption. FSISAC also mentioned that over 20 billion devices are expected to migrate to quantum safe standards in the next decade. So that's where the attention is starting to move as well, and because we know that the failure to act as well will also put long-term trust and confidentiality in financial transactions at risk. AI governance, which is the topic of the day for sure. We see a deployment of agentic AI as well in areas like lending and fraud detection. All these regulatory frameworks must also evolve to balance innovation with accountability. So of course, with the EU AI Act leading by example and national frameworks in places like Japan, Singapore, Canada as well, all of this work is necessary to support the regulators in navigating all of these frameworks with the industry contextual relevance. So that's where we see priorities in the next 5 years. On tokenization, we see a lot of call for harmonized global frameworks to support some of these secure, interoperable tokenized markets. We already see work from OECD, IOSCO, FSB as well, leading the work. And of course, that's leading the charge for us to coordinate some of these regulatory frameworks as well to avoid the risk of fragmented digital financial ecosystems that if they don't speak to each other, then it will then again stall adoption and trust. And finally, on the core tech stack as well, as mentioned, obviously there's a lot of work on by DORA in the EU. There's also FFIEC guidance in the US and RBI's cloud initiative in India as well. We see a lot of progress on these frameworks, but we of course need to ensure that there's globally interoperable standards now that reflect how this digital infrastructure is going to be core to financial stability. So that's where we see the growth as well. Just to underscore how active policy agendas are, I'm just going to list out a couple of key major regulatory announcements over the last 12 months. You have DORA, that's more mandating cyber resilience for cloud infrastructure. You have the US Executive Order on Safe, Secure and Trustworthy AI, so that guides federal agencies on risk-based AI regulation. OECD also has released its 2025 report on tokenization, so that's also calling for cross-border interoperability and tokenized financial assets. FSB also released its October 2024 paper that looks at systemic risks posed by fragmented tokenized systems. And you of course have the IOSCO 2024 to 2025 work plan as well that prioritize DeFi, tokenized markets, and digital identity for supervisory frameworks as well. So all these regulatory signals will show us that regulators are not reacting at this point. They're really trying to shape a lot of these strategic foundations for a digital-first financial system. So we believe that more work has to be done in working with regions like Africa, Asia, Latin America as well, then to just translate all of these high-level frameworks into on-the-ground pilots, as well as cross-border regulatory alignment also. So quickly covering also our core financial services, there are 5 areas that we feel that targeted policy support can quickly unlock growth. One is cross-border payments. Now that market is already standing at 250 trillion. So the call to action here is really the fact that the system still remains fragmented as well. So we are seeing good work in projects like Nexus, Mbridge as well, that show how interoperability can be achieved across payments. But of course, continued work needs to be done with central banks and fintechs to pilot all these trusted multilateral corridors that will help reduce costs and improve settlement times. Second part on financial literacy, that was mentioned also today. For us, we see there's only 33% of adults that's considered financially literate around the world. So embedding education into digital finance infrastructure is very key, especially for women and underserved groups. Beyond awareness as well, it needs to be actionable literacy tools that's embedded into these products and financial coaching for entrepreneurs, and as well as localized context. I'll skip ahead quickly, so I think running conscious of time, so there's a bit of debate as well. We see areas in insurance, SME finance, and sustainable finance. I just wanted to quickly call out SME finance as well because of the 5.7 trillion MSME finance gap, and as particular to the audience here as well, the need to determine alternative credit scoring, digital identity, and open data systems as well. We are also doing some work in this space, and because I was lucky enough to see Stephanie's slides before I did my slides, so I'm going to do a shameless plug as well. We're sort of kind of addressing this in some of the work that we're doing with the G20 GPFI, so the Global Partnership for Financial Inclusion as well, to align these or close these gaps on market access, skills, and finance for SMEs. So we feel that there's a need to do a lot of work in seamless cross-border participation through digital infrastructure, entrepreneurial resilience by boosting digital and financial literacy, and also creating access to new financial instruments that are supported by conducive regulatory environments. I think the good thing about the work that GFTN does as well is always with the governments first as well, so it's grounded in quite a powerful alignment with the IFC, so the International Finance Corporation, the G20 GPFI as well, and also of course because it's taking place in South Africa this year with the presidency, the South African National Financial Inclusion Priorities as well. So this agenda that we're putting together on the 15th to 17th September is not just a conference, of course. It's really serving as a manifesto for change. So it aims to kind of deliver scalable, high impact solutions, advise actionable pathways through these governments, and also with the key collaborators that we have as well to really shape policy, deploy capital, and also scale digital tools that will transform SME access and leverage finance. So this is a shameless plug to invite all of you to join us in Johannesburg this September. And obviously you can speak to me and my colleague as well if you're interested in being a part of this. That's Nitin, who just raised his hand. I just wanted to close quickly and wrap up really on why we're driving this and what GFTN does also. For us, we foster collaboration across multiple regions, from Rwanda to Japan, from Ghana to Singapore. So for us, it's more important to create financial corridors. It's really embedded in our DNA as well, because Singapore, of course, is a small country. We rely very heavily on corridors across different markets as well. So that's obviously within the DNA of GFTN. For our mission, we work with governments across these regions to create convening forums. Then this activates the ecosystem from the government side of things. And of course, we deliver sort of tailored advisory to be deeply local, but globally connected as well. And we do this through 4 key pillars. The GFTN forums helps to convene policymakers and innovators in those dialogues that we mentioned to focus on these key priorities. We deliver advisory as well to support governments on policy transformation. Digital platforms helps us to expand access to digital public goods for governments and of course private sector as well. And our newest arm, which is the GFTN Capital, which will help mobilize investment directly into inclusive and sustainable finance. So for us, this helps us move from insight to action as well. And then instead of just agenda setting, we're also trying to make sure that there's implementation. So shameless plug, if you believe in what we do as well, join us, have those dialogues with us as well. For us, it's important to bring the industry in place together with the regulators. So
Thank you. I'll let you have the plug. I mean, for everybody's benefit, there is a dialogue going on at the moment between BIIA and GFTN in terms of possible partnerships and working together. So I'm very happy and thank you for that policy guidance. I think there's some interesting developments there that I'm sure are going to be, we'd like to follow and will provide opportunities for the industry. So we are coming up to time, but I'm wondering if anybody's got a question. Now this is whether they've been listening or not. Test. So if somebody puts their hand up. There Nitin's going, so that's fine. Any questions for our panel? I mean, we've tried to go on a journey here, as I've said, and talk about Europe and talk about how APAC is responding. We've obviously picked up some differences, and so we have a question. No? Somebody's got a microphone anyway. Oh, Adrian's got one. Always rely on Adrian. Thank you, Adrian. Yeah. And if it's when is the coffee break, it's after your question.
Hi, everybody. No, it's not really a question. It's a point, and I don't think we've spoken enough about it today. This is the effect of quantum computing, and it's going to be so extreme, regardless of all the developments that are taking place with Gen AI today, the chip development, etc. We are getting to a breakthrough point on the whole thing, where IBM has pioneered it and been struggling for years, etc., but it's going to become reality. And in Hanoi, we spoke about it more frequently, but it's really something that your mind can almost not conceive is possible. And it's going to erupt everything. And I think we need to spend a little more time thinking about that as it's coming down the road. And some of the big names in the technology industry are already talking about launching certain things. Could be this year, could be next, but the impact is it's going to overtake the abilities of the human mind. And just think about that. It's going to be significant.
So I can retire. Is that right?
No, why?
Well, take over my mind. No, I mean, I take your point about quantum computing, and I think I'm pretty certain it will be continuing to feature. We haven't necessarily picked it up in this session, and I take that point. I mean, I don't know how regulators are going to respond to quantum computing, because it's a completely different dynamic, and it's just, where are the control points, where are the measurement points in quantum computing, and they're just not going to be there. So it's going to be fascinating. And I'm sure from a tech stack perspective, then I'm sure GFTN will be involved in that. Thank you, Adrian, for that. Any other questions? Okay. If not, please join me in thanking our panel for that very interesting discussion. Thank you very much. We're going to go to another break, so you can get that well-earned coffee in or tea. We're going to have probably going to look to come back at 4:15, if that's okay, because we have our last session of the day, which is continuing our story. We've talked about technology, we've talked about regulation. We're going to talk about now something which has already been mentioned several times around sustainability and that area and the role of data and technology in that, which I think is relevant to all of us. So my colleague at BIIA, Ingrid, will be leading that. So please respect her and her panel by coming back probably at 4:15. Because Ingrid's a stickler, and if you're not here, you'll get locked out in terms of not being allowed in. But thank you for bearing with us this afternoon. Please, stay with us. I think the last session is going to be very informative, but enjoy your break, which is actually sponsored by Optisol Business Solutions. I think the team from Optisol are here somewhere. Yeah. So please say hello to them during the break. Thank them for their tea and coffee, and have a discussion with them. And thank you, Optisol, for your support. As a recent member, much appreciated. So I'll leave you to your break. Thank you very much. Thank you, Stephanie. Take me down. I'll be talking.